The Reserve Bank of Australia remains unchanged on its decision not to raise interest rates until 2024. Joining me live now is Peter Switzer, founder of the Switzer Report. Of course, Pete, good morning to you. So economists and market experts do not agree. Why is that?
Well, I think there's a bit of a tall story being told. It's a small tall story. I think the Reserve Bank is committed to believing that in 2024 cash rates will go up because they don't think inflation and wage inflation particularly will be all that strong. And it reminds me of that episode in Seinfeld, Pete. You know, George Costanza said, "It's not a lie if you believe it." And I think the Reserve Bank believes that the cash rate won't move. However, what we've noticed is the cheap money that the government via APRA and RBA provided to the banks during the crisis of the coronavirus, that money's now dried up. So banks are starting to have to pay a lot more for its money than it did over the last year or so. So what the experts in the money markets are telling me now is that get ready for eventually an out-of-cycle rate rise that the banks will impose on home loan borrowers. This is something that's more likely to happen probably at the end of 2022 or the beginning of 2023, particularly if you believe, say, the chief economist at Westpac, Bill Evans, who last week told me a 7% Aussie economy, economic growth-wise, is coming up in 2022. You get that kind of growth, the pressure for banks to raise rates will be spectacular. And also the US is likely to raise rates, and so is the UK. So there's going to be a lot of pressure on both the Reserve Bank, but particularly our banks, to raise interest rates.
You'd have to think once they do it once, they might do it a couple of times as well. Would that be your view once that eventual rate rise happens?
Yeah. When the Reserve Bank raises the cash rate, you often see at least 2 or 3 rises because they really want to make sure that the economy is doing well before they start slowing it down. But once they recognise that the economy is doing well, and maybe too well, you often do see 2 or 3 cash rate rises. The banks themselves doing it out of cycle rises could be on a different time frame. They might do one, wait a quarter or 2, and maybe another one, depending on the strength or the cost of the borrowing that they have to make those loans.
So let's stay with the RBA, Pete. It says jobs lost to Delta will return by Christmas. That's not a bad bounce back. Do you believe that can happen?
Yeah, I think numerically they're probably right because there's going to be an enormous demand out of lockdown, Pete. We saw that last time we came out of lockdown. You add the fact that we got pre-Christmas sales. So I think, and also throw into the equation, we haven't got foreign workers like we used to as well. So I think numerically the jobs lost, if it was, say, 300,000 in New South Wales alone, well, those 300,000 could come back. But you could not argue that CBD businesses are going to be anywhere back to normal and therefore creating the old jobs that used to be there until workers get back in offices. And that's not going to happen until after Christmas. And even then, it could be a 10 or 15% percentage of office workers who'll never return because the employer's happy to do it and the employees want to do it as well. But I think there's going to be some time before actual jobs come back. But numerically, I think the RBA is probably on the money.
Okay, and just finally, Pete, bond yields are rising, but so are those tech stocks. What gives here?
Yeah, we had this belief that we saw about a few months ago that as soon as bond yields went up, tech stocks went down. Well, I've checked. NASDAQ is now up 4% in 5 days. Tesla's up 6% in 5 days. And so what we're seeing, Pete, is that the multiple forces that operate in the stock market and that relationship between bond yields going up and tech stocks going down, it probably is believable. But US earnings have been so good. Company earnings have actually surprised the market, and that's the reason why Wall Street's going up. And those forces are offsetting any fears that interest rates might rise anytime soon and therefore hurt tech stocks, because tech stocks invariably are based on the idea that lots of revenue is going to come, but if interest rates are going to rise, that will undermine the benefits of that revenue. At the moment, the good story coming out of the US is corporate earnings very, very good.